Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So this week I'm going to try something a little different with the chart uploading. I'm using Supload, which is basically an Imager clone with revenue sharing in Bitcoin. Let me know if you like or don't like this format. Just want to show you that they exist and they're interesting and I like the idea, and it uses Bitcoin, which is cool. Second thing, I was in a trade this week on one broker, went well, 10x, they have 10x now, and they also have a larger total exchange-wide Bitcoin cap. So check that out if you haven't. Wrote another article for BNC, check that out. I won't talk about most of those charts in this video. Something that is pretty interesting on the fundamental side that many people are talking about is JPY and USD and CNY volume. So you can see that after the PBOC stuff, CNY volume and really volume globally just died. You can see overall recently that JPY volume has definitely surpassed USD and CNY volume. So maybe it's worth checking out the JPY exchanges, Bitflyer and Quinone or something. Charting and following Bitflyer and Quinone over Bitfinex, OKCoin, BTC CNY, etc. just based on volume. This is off Brave New Coin, and you can sort by currency. And then lastly, I'm not going to talk about this in the video, but I wrote an article on Ethereum, TA, published it on Google Doc, and then it just got picked up by Crypto Hustle's website. So check that out if you're interested. So let's get to some charts. Haven't talked about Heikin-Ashi in a while, so thought it's a good time for that. Basically, Heikin-Ashi is really good to look at when you're trying to assess health of a trend or trend direction or flip of the trend or where we are at in the trend. General idea is when the trend flips like this after being bearish for a long time or bullish for a long time, you either open or close a trade. You can wait for the second candle. So you'll see here there's no bottom wick on any of this stuff, okay, which is highly bullish, as there's no top wick on any of these candles, which is highly bearish. Okay, same thing here. Currently we're seeing no bottom wick on any of this Heikin-Ashi stuff except here. Now mind you that this isn't raw data, it's manipulated mathematically, so you're not always going to see bottom wicks. Here you can see that trend is weakening, the doji itself is smaller, the thicker the candle body, the stronger the trend, the stronger the momentum. I did a video on Heikin-Ashi, you can check that out, I'll link that up in the description. Currently you can see we are opening above the previous candle body or closing above the previous candle body. It certainly says to me anyway that we're not in this trend is over phase or reversal phase on the weekly, which is no surprise. Going to the daily, you can see we had, this is really hard to see on Heikin-Ashi because it was sort of an event. That was a PBOC thing, just like it was here. So you're not going to see that on Heikin-Ashi effectively as far as an actionable trading perspective, just because Heikin-Ashi is lagging. So you can see here, after this Heikin-Ashi or after this PBOC stuff happened, on the second candle, this would be your entry. So if you were still long, you would be long this whole time and waiting for another doji spinning top type deal. I don't have a good example of this on here, but you're looking for this stuff as far as a stop is concerned. So you're long, and you're waiting for something like this, and that's where your stop is. So, if you're long here, your stop would be here. If you're long from this candle, you'd still be long. You can move your stop up to the candle with a bottom wick. It's really up to you how you want to play it if you're looking at Heikin-Ashi specifically. If you're looking at 4 hour, you can see a better example even as far as the stops are concerned. So let's say you go long after you see momentum on this candle, it's sort of sideways, and then you see momentum. Okay, we go long on this candle, whatever you want to do. Your stop would be here. You'd keep moving it up. Your stop would be here. And then depending on how you want to play it, it gets a little messy in here because we're sideways. So that's completely up to you. So again, if you see this candle on the 4 hour and then you wait for momentum, where there's no bottom wick, okay, so this candle here, let's say you're still long, you can move your stop successively, consecutively, whatever, up to here, let's say, and then you'd be out of the trade. This is essentially the same as using the fractal system I use, which I've talked about on various videos already. So currently there's no 4 hour indication to go long that I'm seeing based on Heikin-Ashi, which is part of this whole video is going to be like mixed messages waiting for momentum, okay. Hourly it gets pretty noisy. I don't really like Heikin-Ashi with Bitcoin on hourly, but I'm sure there are people who use it effectively. Again, there's nothing here screaming go long right now on low time frames. Something else you want to sort of pay attention to, again, this isn't raw data, it's manipulated mathematically, so patterns, this looks like a bear flag or whatever, descending triangle. This might look like a flag, but keep in mind that patterns don't look on Heikin Ashi generally how they look on normal candlesticks. Alright, so that's Heikin Ashi, and you can always use Heikin Ashi with cloud. I talked about that in the Heikin Ashi video. It's kind of effective. I just prefer raw candlesticks, but it's good when you're kind of not sure what's going on and you want to look at it from a different perspective. Weekly candlesticks with cloud. Last week I said, this candle wasn't screaming bullishness. It's sort of a spinning top, 50-50 candle. We had a nice fat green candle above that. We haven't broken the local high yet, so will she or won't she? I don't know. We'll see. And again, the levels you're concerned about are Kijun and flat Kumo and flat Kumo. And this may just later weeks to come sort of oscillate in between that. And the wild cards going forward for the rest of the month would be PBOC announcements or Winklevi ETF announcements, one way or the other. If it's a no by the SEC, I don't expect any movement in price. If it's a yes, I expect a large movement bullishly in price. Here's daily cloud. You can see we have the TK cross, got stopped by PBOC announcements. So again, essentially in Bitcoin's history, bullish TK recrosses above cloud have gone nowhere, quote unquote. You can see we're back to the local high. Again, this spinning top candle followed by bearish candle on the daily. Doesn't scream continuation to me. It's 50-50. You can see we had a 50-50 candle before the PBOC announcement. Not that I'm looking for another PBOC announcement or wanting one, but it just doesn't say we're going to continue up from here based on the current candles. The other thing you're starting to see is a TK C-clamp forming, or a TK disequilibrium. You can see that until Kijun sort of catches up with price, there's a probability that we're going to try to reach for the Kijun over new highs. And you can see when we're trending like this and there's momentum, we can certainly just expand that disequilibrium indefinitely until we get a pullback. But when we're sideways like this, that just says to me that we're going to go towards the Kijun, or the Kijun's going to catch up with price. So essentially we're just going to remain sideways. And things that, again, that would change that would be PBOC announcements or Winklevi ETF around March 12th. You can see that interestingly, there's a dip in the cloud support here. I'll talk about that with another chart, but we could see stuff that goes all the way down to here and up. Again, that would be bullish trend on balance, just like it was here. All this was certainly bearish in the days or the lower time frame, but on balance, it's above the cloud, it's bullish, period, end of story. So it's daily, going down to 4 hour. Again, you can see this C-clamp here. This tells you be careful going long. TK disequilibrium is really wide. This says that we're overbought, just like it did here. And again, this was a leading indicator even before the PBOC announcement that there was some overbought on the cloud and oscillators in general. So the technicals are sort of set up for this, like I talked about in the last video. When you get technicals that are overbought paired with a bearish fundamental news event, you're going to see a large reaction in price. We certainly have I think it's a larger TK disequilibrium than we did or equal to here. So I'm expecting, you can see Kijun trying to catch up with price, or price is going sideways, or price meeting Kijun. Again, all that says to me is we're not going to spike randomly higher just based on the cloud. And the other things you're looking at, cloud in general is sideways. You can see it's starting to slope up, but on balance, again, it's sideways. What you're looking for is a cloud with a slope like this. You can see we're starting to get that. So overall, 4-hour cloud doesn't look super bullish to me. It's definitely leaning bullish, but it's not open along here and hope for the best type deal. Hourly is starting to look neutral to bearish just because TK is crossing, or probably has crossed by now, and we may get an edge trade here with a touch of like 1028, 1024 should this complete. And you can see interestingly how all these candles, 4 candles on cloud support, just creeping up here. It's definitely squeezing for a move. You could argue there's some sort of bear flag going on here to sort of, give you some mental gymnastics confluence as far as thinking we're going to go down. Is it worth shorting 25 bucks? Depending on your leverage, probably. I'd prefer just to put bids in this area personally, but that's just me. Okay, so that was cloud. Here is Big Daddy Pitchfork. You can see based on the median line, which is like return to mean of the trend, we're right where we should be for this time period. So that's good. I'm not expecting any wild moves one way or the other until we get momentum, like I keep saying. We are right where we should be. Here's 4 hour. What I like to do is draw the pitchforks on the daily and then just sort of zoom in and out to see how it looks. And again, we might get support around this area, 1030, 1040, based on the median line. So is it worth putting bids there? Yeah, probably, just based on the pitchfork, based on the cloud. I don't think it's worth going long at the moment, like I've said, for all the other reasons. Here it is on the hourly. If you want it super specific, surgical entries, just zoom it down to the hourly. I don't like anything lower than the hourly just because it gets kind of noisy, especially on Bitstamp where volume isn't the greatest to begin with. So here's the smaller pitchfork, the most recent pitchfork. You can see we're kind of just in the middle of stuff. There's no immediate resistance or support. So could we make a higher high here based on this pitchfork? Sure. We could also bounce down here. You know, this is like 50-50 territory. That's something I like taking an immediate trade on. And again, here's 4 hour. You can see how I'm always talking about consolidating around the median line and then making a decision. Again, technicals were there before the PVOC announcement, one way or the other, as far as going from one diag down or up. So pretty interesting that lined up. And here's the hourly. Again, you can see even better, just sort of in the middle of things. So based on this pitchfork, again, there's nothing that tells me to go one way or the other. I was looking at B bands and trying to figure out what to say, just because it feels like we're starting to consolidate again and starting to like go sideways and gather momentum. So what I'd be looking for is this is a B band width. So I'd be looking for a squeeze equal to the previous squeeze before we broke out. And you can see before that squeeze, we were above the median line or median of the B bands for like a week. Okay, that screams up over down. Just like over here, we were below the median line for a week before the squeeze finally broke, which screams down over up, even though at the time I really wanted this to go up and the cloud was telling me this might bounce, but it didn't. And this was the Bitfinex hack. So again, technicals preceded the fundamental news event of Bitfinex being hacked, okay? So we were leaning bearish for a week on B-band squeeze before we broke down. Now here, this whole time we've been leaning bullish, so there's certainly a bullish bias. Should the squeeze continue for a week, which would be great, then we'd get momentum, and then we could certainly slingshot upwards, okay? That'd be excellent. So again, the squeeze you're looking for, as far as the size of the bands are concerned, I always just look to the previous squeeze and see what happened then. Whether or not it'll reach this level, I don't know, but it's worth following for next week. Somebody was asking me about MACD and Ichimoku Cloud. So this is CryptoWatch, and what I did with MACD is also double all the settings. And you can see in the last video I was talking about this 4 hour entry, and if you're waiting for MACD, what you're looking for is, for longs, you're looking for the signal lines to be above the 0 point. You're looking for the first or second green histogram bar, okay? And you're also looking for the signal line to be above the other signal line. I don't know the names of these, but you get the point. And that you can see how that lines up perfectly with price above cloud, bullish TK, break of just this range here. So if you're looking for like checks and balances on the TK crosses and entries, oscillators are certainly a great way to do that. And if we look at the most recent TK 4 hour Kumo breakout, again, same story. Kumo breakouts here. We get a green on the MACD histogram. The signal line isn't above 0 yet, but when it does get above 0 on this candle or this candle, again, depending on how you want to play this, how your entries, what your risk profile is, etc., etc. That's just one way to look at it for MACD. If you don't like the doubled settings, you can certainly use the singled. I played around with it and it was just too noisy and didn't really make sense. So it's not going to look like this every time. Again, checks and balances on the TK crosses. And again, if you're looking for re-entry, this is something I'm looking at right now. You can see MACD was red, signal lines were crossed bearishly, but until the histogram turns green, you know, that could be your re-entry. So your re-entry would be this candle here, and look at the payoff for that. Something else you can use for MACD are divs or divergences. And you get a lower low or a higher high in price and not a lower low or higher high in the MACD or the signal lines. That's a divergence, meaning it doesn't line up with price itself, so you'd expect a reversal at that point soon, over continuation. You can see here there wasn't a div. We made a higher high in price, higher high in MACD, higher high in price, higher high in MACD. You can see here there was a lower MACD, higher price, you know, and it kind of went sideways from there. So again, how you want to play that's up to you. Just sort of be aware of those things as you're entering or closing trades. Something else I saw the setup for, certainly the numbers aren't exact. And I'm not the best with harmonics anyway, but it's worth thinking about. What I'm showing is a bullish bat, which would be the blue, and a bullish Gartley, which would be the yellow. Harmonics are sort of named reversely. So if price is going down, you expect it to bounce at the last point. If price is going up, you expect it to sell off at the last point. So you can see how the Gartley, the yellow one, sort of lines up with the cloud. I always just matched whatever this last number should be, even though these should be like 0.886 and something, I don't even know, but you can look it up. 1.27 is where you'd expect the bounce from, and then 887, for the bat is where you'd expect the bounce from. So if we bounce on these levels, you may expect a touch of these zones. Just something to think about. And then again, this is the Winklevi ETF announcement, yes or no, by the SEC. So that may make things interesting. You can sort of look for harmonics anytime you see a double top like this, like we're getting just locally. Whether or not it'll play out like this, I don't know, but something to consider. And then lastly, there's a nice argument for a cup and handle on the daily. The most important thing is what you're waiting for. The entry is a break of horizontal resistance on volume and no sooner. You're waiting for a peak in volume with a break of the horizontal, and I publish this just so you can watch it as it goes along. The measured move would just conservatively be the depth of the cup upward, and that gives us a 1400 target. So whether or not we'll see that, or after the, again, I keep saying this, but the Winklevi ETF decision. And that's all I have for today, guys. So like, dislike, comment, subscribe, hit me up on Twitter, Telegram. Let me know if you like the BNC articles or the Supload chart format, and happy trading.